This indicator is easily one of the best indicators to use when scalping any market. It can provide you with very clear biases in the market and tell you precisely when you are in a zone that is ideal for trading. The indicator we are talking about is called the Andean oscillator, a high-level indicator that can provide you with trend biases, trend reversals, strong and weak trend zones, and so much more. In today's video, we are going to show you exactly how to read this indicator, how it can be used for entries and exits, a profitable scalping strategy that you can apply today, and we will also provide you with a completely free upgraded version that our team created that automatically plots this information on the candles for you, making it easier to understand so you'll want to stick around until the end. Let's start with the original version of this indicator. To add the indicator to the chart, click on the Indicator Search tab and search for the Andean oscillator. Select the indicator created by Alex Grover and add it to the chart. Let's head over to the settings of the indicator by clicking this gear icon. Here we can see we have two options available. The length option controls the significance of the trends that are being detected. Increasing this value will provide longer-term trends, and decreasing will provide shorter-term trends. Since we will be using the indicator for scalping short moves, we will keep it on its defaults of 50. Next is the signal length, which is this line. This is just a moving average and it will be used for entries and exits. So if we decrease this value, you'll notice the signal lines will tighten more to the others and this can result in a lot of mixed signals. We will increase this to 50, smoothing out the signals detected, and this will eliminate a lot of false signals. Those are the only changes we will make. Go ahead and click OK. This indicator has three components. We have the bullish component, the bearish component, and the signal line. If the bearish component, which is the red line, is above the green line, this indicates bearish momentum. And if the bullish component, this green line, is above the bearish component, this indicates bullish momentum. These do not indicate that it is time to click buy or sell. This is just to determine what is the directional bias of the market at these points. When there is bearish momentum in the market, pay close attention to the bullish component. If in bearish momentum and the bullish component line is at 0, this shows an extremely strong bearish trend. The opposite is also true. If we are experiencing bullish momentum and the bearish component line is at 0, this indicates a strong bullish trend. As the line moves from 0, it goes closer to crossing the opposing component line, and this is what causes a momentum change. Now let's understand how the indicator can be used to find buy or sell signals. For this, we will use the signal line. If in bullish momentum and the signal line crosses under the bullish component, this is a signal to buy. Then when it crosses back above, this is a signal to exit your buys. If in bearish momentum and the signal line crosses below the bearish component, this is a signal to sell, and when the signal line crosses back above, this is a signal to exit your sells. This is the most straightforward way of reading this indicator. However, there are other methods which can be more profitable. One of those methods involves ensuring that the component line has 0 variations at the point of the trade. Here we can see we have bullish momentum and we have the signal line crossing below the bullish component line, but if we look at the bearish component line, we can see it's not at 0. This means that there is still some sellers in the market. Due to this, we might want to skip this trade and wait on another. For this trade, we have bullish momentum, and the signal line is crossing below the bullish component line and the bearish component line is staying at 0. This indicates a strong signal. We can execute keeping stop below recent swing lows and targeting a 1 to 2 risk to reward. In this setup, we have bearish momentum and the signal line is crossing below the bearish component line. The bullish component line is at 0. We can also execute on this trade with stops at recent swing high and target a 1 to 2 risk to reward. In order to create a complete scalping strategy using this indicator, we will need to add some other indicators to our chart in order to cover different aspects of the market that are not covered in this one indicator. We will also now share with you a version of this indicator we created that plots the exact buy and sell signals and colors the candles to tell you exactly when there isn't any variations in trend, so you can know exactly when to click buy and sell. But before that, if you are enjoying the video, Don't forget to like and subscribe to not miss out on future videos, where we will be offering even more free reprogrammed indicators to pair along with other tested strategies. And if you would like to try the #1 premium indicator on TradingView by luxalgo risk-free for 30 days, you can use the link in the video description. Your continued support really helps the channel. Now to show you exactly how to use the indicator to find insane scalping opportunities. We will use this version of the indicator that prints the signals on the candles. As you can see, the signals being displayed on the chart are directly correlated to the signals of the oscillator. However, this indicator will only print a signal if the variation is 0. So this bullish signal, denoted by B, has the signal line crossing below the bullish component line, and the bearish variation line is at 0. If the bearish variation line is not at 0, then the indicator will not print a signal, such as here. The indicator also colors the candles to show you exactly where there is an extremely strong trend, and plots these X to show you when to exit a position. You can get access to this version of the indicator for free by copying the code using the link in the video description. Next, click on the Indicators tab and search ADX, add this one under Technicals. Now draw a line at the 20 level of the ADX. Now go back to the settings of the Andean indicator and ensure the signal line is set to 50. Great. Now this is the strategy. Let's go to the 15-minute time frame on gold. For buy trades, we want to ensure we are only taking trades when there is 0 bearish variations in the market and there is bullish momentum. Next, we want to ensure that the ADX line is above the 20 level and its slope is also pointing upwards. Once these conditions are met, we can execute with stops below the previous 2 candles and target a 1 to 1.5 risk to reward trade. For bearish trades, we want to ensure that we have bearish momentum and there is 0 bullish variation on price. The ADX line has to also be above 20 and its slope has to be bullish. Then we can execute with stops above the previous 2 candles and target a 1 to 1.5 risk to reward. The ADX indicator, also called the average directional index, is used to determine confluence in the strength of the trend. When the line is above the 20 level, this is typically considered a strong trending market, and when below the 20 level the trend is considered weak. Using this alongside the buy and sell labels of the Andean oscillator makes for great execution zones. In this situation, we can see we have bullish momentum in the market and the signal line is crossing below the bullish component line, but as you can see, the bearish component line is not at 0, so we have some bearish variation in the market, so this would not be a good trade to take, and as a result no signals are plotted. In this other situation, however, we can see we have bullish momentum, the signal line crossing below the bullish component, 0 variations in trend, and the ADX line is also showing strong trend. All strong signs, so we can execute with stops below the previous 2 candles and target a 1 to 1.5 risk to reward. Now let's see how the trade plays out. Amazing! Though it is not recommended with this indicator, you can also hold trades for longer periods until the X signal is printed. This is not recommended due to the fact that as price trends in your direction, more opposing trend variations will be introduced, increasing the likelihood the trend will turn against you, and by the time the X is printed the trend might already be changing. Due to this, when we use this indicator to find longer-term trends, we like to use the Smart Trail feature of the Signals and Overlays indicator by luxalgo, which will trail price closely. For example, in this bullish trade, if more bearish variations enter the market, we can exit positions quickly and capture some profits. Here we can see we got a bearish signal, and if we held the trade based on the Smart Trail, we could have gained an incredible amount of profits. We hope you enjoyed this video on the Andean oscillator, a top-tier indicator that can be used to find the best possible zones for trade executions. Don't forget, in the description is the link to this version of the indicator that automatically plots entries and exits signals on your chart. And if you would like to try luxalgo Premium, where you will get access to the top premium indicators on TradingView, such as the oscillator matrix, signals and overlays, and price action concepts indicator, you can use the link in the video description to try them risk-free for 30 days. Like, share, and subscribe, and we will see you again next time.